Markets went up and down today. The Dow dropped big, the S&P barely moved, but Netflix didn't flinch. Why is Netflix staying strong when others aren't? I'm Rylan Vaughn, and in just a few minutes, I'll break it all down. So it was a mixed day on Wall Street. The S&P 500 went up just a little, but the Dow Jones fell sharply, dropping more than 500 points after the United Health reported much lower earnings than expected. The S&P 500, short for Standard & Poor's 500, is a list of 500 of biggest public companies in the United States across many industries, like the tech, healthcare, energy, finance, and so on. It's one of the best ways to see how the U.S. market, stock market, is doing overall, because it includes such a wide mix of companies. If the S&P 500 goes up, it usually means many big companies are doing well. If it goes down, then the opposite. The Dow Jones Industrial Average, often just called the Dow, tracks 30 major U.S. companies like Apple, Coca-Cola, Microsoft, and many others. It's older and a bit more old school than the S&P 500, and it includes some of the most well-known and influential companies. While it only has 30 companies, it is still seen as a snapshot of how big American businesses are doing. So that news pulled the whole index down. The Nasdaq also slipped, but not as badly as it did on Wednesday this week, when tech stocks fell hard. In short, investors are still nervous, and just one bad report can shake the whole market. On the flip side of it, Netflix had a great start to the year, with its earning up to 25% in the first quarter, way better than Wall Street expected. While other companies are struggling with tariffs and recession worries, Netflix doing just fine. In their own words, no big changes for us. So in other words, everything is okay. Investors and analysts believe that Netflix can handle tough economy because it doesn't depend on global supply chain. It makes real profits, unlike many other streaming platforms like YouTube and other platforms. Equipped with 300 million users, it is a major player in the home entertainment. Here's the key point. People usually don't cancel streaming services, even when cutting back on spending. Streaming is the top way people watch TV in the US and Europe, even more than YouTube or cable. While the S&P 500 is down by 10% this year, Netflix stock is up nearly 10% year to date. Looking ahead, Netflix will stop sharing, subscriber numbers and focus more on growing revenue. It's aiming to be, worth $1 trillion by 2030, and it plans to grow its ads business and invest more in live sports. The bottom line, Netflix isn't just surviving, it's doing really well, even in a shaky market. So what today's market tells us: markets go up and down. That's just how the economy works. These ups and downs, called business cycles, happen over and over again. Some industries rise and fall with the economy, but others, like streaming, stay strong, because when money is tight, people cut back on expensive things, but they still want cheap entertainment. We also saw how the government helps, during slowdowns by adjusting spending and taxes. This helps support the economy when businesses pull back. But companies like Netflix, for example, don't rely much on global trade and make steady money, so they are more stable. They don't need help. They just need people to keep watching. In short, businesses that offer good value reach lots of people and keep them coming back are the ones that usually do well, especially in shaky markets, no matter what the market looks like. That was pretty much it for this short video. Make sure to like, subscribe, and I'll catch you in the next one.